Welcome to the Retiring Real Estate Investor Podcast, where we will discuss how to defer taxes on the sale of your property, earning passive real estate income, and everything you need to know to go from active investor to passive investor. Join us as we interview passive investment sponsors, explore the journey of other retiring real estate investors, and share our due diligence process we perform to select passive investments. Investment advisory services provided by Insight Investment Advisors, LLC, a registered investment advisor. This podcast is only intended for clients and interested investors residing in the states in which we are registered to provide investment advisory services or exempt from registration. Please contact us to determine if the firm provides investment advisory services in the state where you reside. All content on this podcast is for informational purposes only and should not be considered investment advice. Material presented is believed to be reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness. Insight Investment Advisors, LLC and its representatives do not provide tax or legal advice, and nothing herein should be construed as such. Always consult with your tax advisor or attorney regarding your specific circumstances. Welcome, everyone, to a live episode of the Retiring Real Estate Investor Podcast. I'm your host, Brandon Bruckman. I am joined by Nick Keys, a principal at Dickman and Associates, Dickman Company. Thank you for joining us. Thank you for doing this. A lot of this is Nick's sort of mind child of come together and do this in person. So I appreciate the effort and the thought of doing this live.
Yeah, thank you. Thanks for having me. It's awesome to be here. Glad to be a part of the first quote unquote live show, I think, right?
I think so, yeah. Yes.
That's awesome. First in person, maybe?
First in person, and well, not necessarily, well, maybe live, but first in person for sure.
Cool.
That we've done. So this is great.
Awesome. Thank you.
That's awesome. So give our listeners a little bit of your background. You're working in, at, and around industrial real estate, which is, we got connected on LinkedIn, and then we ran into each other at a commerce meeting where we were talking about industrial, which I'm so excited about, particularly in the state of Wisconsin. Talk about what you're doing now around industrial real estate.
Sure. So I have been in the business for about 10 years. I got started in 2013. I've been a Milwaukee resident since about 2008. And I got into the real estate business to help clients and at the same time try to invest a little bit into real estate.
There you go.
So when I got started in 2013, I came in as an industrial broker. So my pure focus day to day is working within industrial real estate. I focus on manufacturing, distribution, transportation services, and that's across the state of Wisconsin. A lot of my focus is within southeastern Wisconsin. You can draw a big triangle from the Fox Valley, Green Bay and Appleton to Madison, and then down into Kenosha, Racine. It's kind of the area that I focus on. When I got started in the business, I was doing a lot of cold calling, which I still do. I still pride myself on making those calls, but it was a lot of driving around industrial parks, a lot of knocking on doors, and I got to know a lot of the owners of these manufacturing businesses in that way. Well, 10 years ago, a lot of these owners were in their 50s or in their 60s. Fast forward 10 years, a lot of these people are getting ready for retirement. And so my business has transitioned a little bit where I used to be solely focused on representation, right? I'm going to go out and I'm going to help the manufacturer expand. We're going to find a new building. We're going to lease some more space, whatever they need. I'm going to help them find it. That's now transitioned to they're thinking about selling the business. They're thinking about transitioning the business to a family member. Whatever it is, they're going to be stepping out of the picture. Now they're trying to figure out what do we do with this real estate. So with that transition, my business has evolved a little bit more into the investment side of industrial real estate. So I work with a lot of owners, a lot of family businesses, a lot of sellers as they get ready to basically move on from their real estate.
What led you to industrial? Because if I think 10 years ago, not the same market that we're in today.
Absolutely
Probably
not
quite as exciting.
No, it was a bit of a dog, to be honest. So when I got started in the business, I interviewed with a few firms, and it was actually my second interview with the company I'm at now, and I was taken on a site tour. So they said, why don't you hop in the car? We're going to go down. We're going to kind of show you how this all works. And we walked into the old Caterpillar manufacturing facility in South Milwaukee, and I watched a 100-ton crane pick up a front-end loader and move it across the floor of the facility. And I was just like, right? Like, this is so cool, like I get to be kind of like on the floor, like in the mix of everything. And I thought that was the coolest thing. So day one, I was excited about it. And, I never looked back.
it's like we're kids again, right? Playing with big toys and bigger
Exactly.
toys. Talk about the current state of the market here in Wisconsin. And there's probably national trends to this as well. What are you seeing? And I'll prompt you with, I believe occupancy levels on industrial buildings are over 99%. Whoa.
It's crazy.
Yeah, it's wild. Talk to us about the current state of affairs.
So southeastern Wisconsin, let's use that as the geography.
Yep.
We're currently hovering somewhere between about 1.5% and 2.5% vacancy,
Yeah.
right? So you take 100 buildings, one, maybe two of them are empty.
That's wild.
So think about how tough that is for a manufacturer or a warehousing group that wants to go out and they want to expand. Yeah, I'll show you what's out there. It's going to take about 25 minutes, right? Like we're going to get through just a couple of tours and that's going to be it. So throughout the last probably 5-6 years, we've seen just a tremendous amount of development of new construction in southeastern Wisconsin. A lot of that has ran from Milwaukee down to Kenosha and Racine on the 94 corridor. Much of it was spurred by Foxconn and that large development project. And with all of that, we've seen businesses relocate from other parts of the country, businesses relocate from other parts of the state. So that in itself has driven up demand for the real estate here. But then you bolt on e-commerce. So again, about 5-7 years looking back, you've seen this huge demand for primarily warehousing space, but a lot of these components need to be made as close to distribution facilities as possible. So you see an increase in demand for manufacturing and assembly, which ultimately feeds the machine of distribution, last mile logistics facilities, and that sucks up every little bit of space that we have. So the industrial market has been awesome locally. We've seen a lot of new development, and we actually we're pretty bullish. We think we're going to see some more development here in the next couple of years.
I was going to ask about that too. As you see these occupancy levels at this rate, the development has to be happening. It sounds like we're absorbing that as a market. Any concern that we're overdeveloping, or we had not even close to hitting that sort of threshold where you'd start to think, ooh, maybe a little bit too much, too fast?
I do not think we've overbuilt. I think there is plenty of runway there. I would tell you with the changing economy and the rising rate environment, new construction has slowed down significantly from the same time last year. And that's principally driven to costs, right? So we had all these supply chain issues, building material shortages. Those issues have caused the cost of construction to rise crazy, which then in turn raises your rent. Okay, so if you're ABC Manufacturing down here and you want to go out and you want to rent a new building, pre-COVID, 2019, maybe we're talking about $4.50 a square foot. Today, that same building is going to rent for probably closer to about $7.50. So you're almost double what it previously cost. And we're starting to hit that inflection point. It's, okay, Mr. Manufacturer, can you afford to pay $7.50? If the answer is no, well, I'm not going to go build another building because no one can afford to rent it from me, right? So that inevitably is going to cause a slowdown of new construction, which is going to make our vacancy problem even worse, unfortunately. But that's going to kind of be the force that drives everything down.
So it makes it sort of an intriguing time. As you mentioned, some of your clients, and they're starting to make that transition towards selling. It makes a very interesting time for them to sell. Talk to us a little bit about, why do folks work with you? What are you bringing to the table for them to start thinking about these transitions? Because it sounds like you're doing a lot more than just, hey, let's get you the best price we can for this building. Those decision points for that seller are much bigger than that. Discuss that a little.
Sure. So when we sit down with a business owner, a building owner, we're typically brought into the conversation by one of their trusted advisors, right? It's typically somebody that we've worked with that's in their kind of circle of influence. So often we're referred in by a banker or an attorney or an accountant or somebody that's helping to advise them. And when we sit down with them, first and foremost, we want to try to bring them some peace of mind, right? For many owners of real estate, this is their largest asset, right? Or this is where they have all of their investment tied up. And they want to make sure that, one, they're making, a good decision on what to do, but then two, they're maximizing the value of that. So we want to help bring them peace of mind. We also want to help simplify their life. So a lot of times for real estate owners, everybody thinks it's a passive investing opportunity, as we were talking before the show here, and it's not. Owning real estate, and I don't care who you are, it's involved to some degree, right? There's varying levels, there's a spectrum, but you need to be engaged, at least monitoring what's going on and making sure that the rent's coming in, those types of things. But we want to give them some simplicity to their life, and then ultimately we want to help them focus their time on energy on what they're good at or what they want to spend their time on. So again, going back to overseeing or managing real estate, it's like, listen, would you rather be doing a tour of the building and making sure that the grass is cut and the pavement looks nice, or would you rather be on your boat or playing golf, right? I can tell you the answer. I'd rather be on the boat, right? Like, I don't want to be doing this. So it's like, you know what? Why don't we come in? Let's come up with a strategy. We'll help remove some of the burden of ownership, and then you can go on and do whatever you'd like.
Is that a first transition step? Is starting to remove some of that burden of ownership that you mentioned? Is that a first step? Because it seems like it's a pretty dramatic step, and this is where sort of our businesses overlap a bit. It's a dramatic step that we watch that owner go from very active to passive. There's a lot going on mentally with that and their approach to that. Is there steps along that way that you're taking them to kind of ease that burden that you mentioned? What does that look like?
So when we come into the process, we first want to identify what their needs are, right? So like, why are they doing this? What is the motivating factor for this conversation in the first place? Oftentimes, there's either going to be a transfer of ownership, or there's going to be retirement, or they're going to be selling the business to a family member or something like that. But we want to come in, figure out what their needs are, and then help them create a plan to achieve those goals. That's why it's so interesting kind of how we run parallel paths, right? Because I'm typically dealing with a very active owner of real estate, where either they're occupying the building and managing it, or at a minimum managing it, whereas your side of the business is more, why don't we help with that, right? Why don't we take over that side of it?
Yeah, when we're looking at folks where it's, and we're thinking about it the same way, where I'm asking those same questions about what's the motivating factor here of why you're doing this, right? And the folks that don't fit are the ones that are looking at the market and going, hey, the market tells me that it's a good time to sell. It's like, well, great, but you actually love what you're doing.
Right.
Well, don't. Like, just keep doing what you're doing. That's okay. Like, there'll be another market and opportunity for you to sell this property. Don't do that. As opposed to, I really want to be on the beach, or this is really impacting. I need to lower my golf handicap really fast. Like, okay, now we're hearing the things that I want to hear, where we make sense to make that transition, because it is a transition.
Right.
You share with me before some examples of folks that you work with. Do you want to tackle some of those?
Yeah. So, we often, being in southeastern Wisconsin, we have a ton of fantastic family-owned industrial businesses, right? Whether that's manufacturing or transportation related. We're often called in when the family is making a decision on what to do moving forward. The last, 5, 7, 10 years, we've seen private equity. They've been out doing their thing, but we've really seen them come to southeastern Wisconsin. They're acquiring businesses, they're organizing businesses together, rolling them all up and then, selling them off. But oftentimes, manufacturing business, they'll be approached by private equity, and private equity wants to buy the business. Many times, private equity doesn't want to buy the real estate, right? That's not where they're making money. They're just making money owning that business. And so the owner or the seller in this situation is a bit conflicted, right? They have a great opportunity to sell the business. They don't know what to do with the real estate. So enter Nick Keys. I come into the conversation. It's, hey, why don't I solve for that real estate problem? And so in this example, you have the business being sold. The owner has one of two options. They can either keep the real estate, they can turn into a pure landlord and they're collecting rent. It's great to get those monthly checks, but you're still involved. You still need to make sure that things are operating correctly, they're keeping up on their maintenance responsibilities and so on. The second option is to sell the real estate, right? And so in that scenario, we help them structure what we call a sale-leaseback transaction. It's as simple as it sounds. We create a lease structure that's favorable for the seller and typically the buyer as well, and then we go out to the market and we sell that real estate. The benefit to the new owner is day one they have a tenant, right? There's a great company that was just acquired. They're probably going to get a big cash injection to really supercharge a business. That's who's now paying them rent, and they love that. When it comes to the seller and their decision, oftentimes I get hit with, you know what? I want to retire on this income. I want to keep getting the money. And I don't blame them. I mean, we all invest in real estate, you 100%. Want to have that cash flow. However, they often overlook those maintenance responsibilities. So I just actually closed on a deal probably 3-4 months ago. We had a business owner sold the business like 2 years ago, and he executed a lease with the private equity company. And the last 2 years have been great. Well, spring rolls around and he starts getting phone calls where the roof is leaking a little bit and the parking lot is starting to buckle and, oh no, a retaining wall fell over. Yes, these are responsibilities of the tenant, right? They're in charge of paying for these. However, he's still getting these phone calls.
That's right.
Right? And he's thinking to himself, this sucks, right? Like I did not work for 30 years to be getting phone calls, from a tenant about, a retaining wall falling over. And so, he came to us and he said, look, this is the situation. I have some deferred maintenance on these properties. When I was the tenant, I didn't care. I sent Gary out there to fix it, with some duct tape, and it was fine. Well, now you have a new owner with new expectations of how the business, how the real estate should be ran. And so what we did is we helped identify the deferred maintenance items. And we got out in front of them. We went and collected bids, we got quotes, and we then took this thing to market. We found a buyer that was okay making those maintenance improvements up front. They knew what they were getting into. They had the cash available. And when they purchased the property, they made the improvements. The tenant was now happy. The seller was no longer getting these phone calls. It was a win-win.
Love it. Do you see most, in the options that you mentioned there, do you see most of the business, let's call them the business and real estate owner, when private equity swoops in or whoever swoops in to buy that business, do you see the sale leaseback and the owner be involved? Is that most of the time that's the option straight away? It seems like it's the easiest and most easiest path to continue to sustain income rather than selling that real estate. Is that the most common option?
I would say that's the most common, that we see. I joke that it's, kind of the hammer that we can swing, to fix a lot of problems with the real estate and the business and the separation. But it really is a great tool, right? I mean, you have a chance to free up a whole bunch of equity, and you can alleviate those responsibilities.
Yeah, it's interesting. And I don't think, as you're describing that, I don't think the business owner realizes what they've signed up for when they do that, right? It sounds passive, but in reality, they have become, now I'm not a business owner anymore or operator. I've become a landlord. Right. And I don't know if
that's a whole different game.
I don't know if they're ready.
That's a whole different game.
It's a whole different thing, right? They may not be ready for. I think if I had to guess, they're probably signing up for step 3 of that equation, where it's completely passive income,
mailbox money,
where I'm like, no, that's me over here. I'm the mailbox money, right? This is not mailbox money. It's not running your business either, right? So there is some, I would imagine it's a bit less burdensome, but at the same time, still something to do.
There's always continuing obligations with that stuff.
Absolutely. Absolutely. Other stories. Keep rolling. I don't want to stop you. You shared so many good things with us. Tell us what else. What else? What are some other clients? Another
one that I was thinking about prior to this, we closed on a deal at the end of last year, and it was a great example of how, this hammer you can swing does solve a lot of problems. So we met with a group over in West Dallas. It was a business with 3 partners, okay? So 3 partners own the business, 3 partners own the real estate. One of the partners was getting to an age where they wanted to retire, wanted to move to Florida, play on the golf course. And the other 2 partners were thinking, all right, we have to buy out this partner. What are we going to do? So not only do we have a group of partners that need to come up with a chunk of cash, right? But we also have an entanglement, right? We have multiple owners on the business and the real estate. And we sat down and we came up with a sale-leaseback transaction, right? Who would have thought? And what we were able to do is take a deal to market to maximize value for the sellers. They use that cash to then buy out the third partner, simultaneously separated them from the real estate.
Okay.
So we came in. I wanted to talk a little bit about the terms that we propose in this type of transaction. So when we're looking at the ideal sale-leaseback transaction, there's different appetite for risk on either side as far as an investor goes, but a lot of guys shoot for a 10-year lease. Okay. And a 10-year lease tends to be attractive within this deal structure because it helps get to an inflection point in your amortization schedule, right? So after 10 years, I'm just flipping over where I'm starting to pay down more principal than interest. Okay. So if I execute a 10-year sale leaseback, I have 10 years of runway, right? And at the end of those 10 years, I can either refinance and pull a bunch of cash out, right? I've burned off interest and I can pull out some equity, or I can afford to take a significantly lower rent. Okay. So if that tenant blows out at the end of those 10 years, right, I can backfill the property. I have a safety net under me where I can take a lower rent, or, I have some cash to carry the building. So that was our strategy with the partnership group. We proposed a 10-year sale leaseback. We created a nice structure with the maintenance responsibilities. So we kind of traded, hey, we're going to give the new owner a nice long lease. However, we're not going to maintain too many of the facilities, right? We're going to put a cap on the amount of money that's spent on maintenance. So it was a win-win. The buyer got a nice 10-year deal. They got great financing terms because of the length of that lease, and everybody was happy.
Do you see inside those, I want to ask about those sale-leaseback transactions a little bit. Inside that lease, are you seeing rent bumps? Do you see those annually typically, or are those maybe over a 5 or 10-year period you're starting to see those bumps? Are they more stair-stepped?
So we typically see an annual escalator. Okay. So once per year, the rent is going to increase. In our market, southeastern Wisconsin, we're typically seeing an annual escalator somewhere between 2.5% to 3.5%.
Gotcha.
Within the last, let's say, 8 months, we have seen landlords around here pushing for a 4% increase. That's significant, right?
Yeah.
So that's something I wouldn't tell every landlord, hey, you're going to get that, because tenants understand how big of an obligation that is. But we are starting to see that trend up. The other side of that coin is CPI increases, which also tend to occur annually. That's something that was popular maybe 10, 15 years ago, again, with the changing economy. Fast forward to today, anybody who had a grandfathered CPI increase, 8%, 10%, right? Like you were seeing these huge rent increases, and talk about tenants getting scared, right? So that almost stopped. I can tell you when rates dropped and things were going through the roof with inflation, we really saw tenants saying, no way, I am not agreeing to a CPI increase. So
it's interesting. There's a correct me if I'm wrong, there's a push-pull dynamic here hard between that tenant who probably doesn't want to, the new tenant, in essence, the new company that's taking over this business, they don't want to leave that location.
Right.
At the same time, I think you probably have the new landlords, former business owner, probably, are they looking at this through the lens of, hey, I understand the environment as you described earlier here in Southeast Wisconsin. Maybe do I really want a 10-year lease? How do I extract market rates in a more a quicker fashion? Are they thinking that way, or is that so far beyond what that new landlord is thinking about? Are they thinking about that term and saying, hey, I really want to drive a higher rate or a higher rent out of that? Is that a thought process there, or is there just way too much going on with the business and the sale that's just not a high on their priority list at that point?
Every investor is different. Okay. So I work with groups that prefer short-term leases with below market rents. They underwrite 12 months, 18 months, 24 months of downside, right? They're saying, hey, I have to be able to carry this thing for a period of almost 2 years to go backfill a tenant, right?
Yeah.
But in their mind, I want to make the deal on the front end, get the tenant out of the building, and then wait, right? I want to make some improvements and then wait for a tenant to come along that's going to pay more. On the flip side, you have the more conservative investor. They want to lock it in for 10 years, 15 years, 20 years. I've seen sale-leaseback deals for 20 years.
Wow.
And it's just, I can barely think, what I'm going to have for lunch tomorrow, right? And it's like, holy cow, we're talking 20 years. There's probably going to be multiple changes in the ownership, of the business during that time. So the appetite of investors is different, from person to person. But, a lot of guys are focused on protecting that capital.
Right.
So, they're either protecting their downside by underwriting a lot of the risk, or they're hedging it by taking a nice long-term lease.
That's interesting. Yeah, it is. It is an appetite question for risk for sure on either side of that equation. It's an interesting thing to think about where to go with it. Yeah. I think you had another story for us about businesses, maybe a business that was struggling for cash.
Yeah. So this has really come to the forefront, like in the last probably 4 or 5 months. So we saw everything with Silicon Valley Bank and Signature and that, all of that swirl caused chaos within the lending markets. And there was a period of about 3 weeks where I was on, conference calls with banks. We had deals where term sheets were getting pulled. People couldn't get financing. They were really tightening the requirements for lending. And I was dealing with a manufacturer. They had a great business, right? They had a great track record. They had been in business for about 25, 30 years. And they had extended themselves a little bit too far. The real problem was the supply chain issues. So in 2020, 2021, when nobody could get any products, they were struggling like everybody else. They ended up losing a couple of key clients. Okay, so they couldn't produce the product on time. The client went somewhere else. Well, now a big chunk of the revenue dried up. They can get the product now. They don't have anybody to sell it to. Okay, and so we sat down. They were looking for additional cash, and what was interesting is they had identified an opportunity where they could buy a new piece of equipment, they could install it, start a new product line, and they could tap into a market segment that had awesome growth potential for them. Right. However, the bank was getting nervous about what's going on with the economy. They were raising rates. These guys had, again, over-leveraged themselves a little bit, didn't really have lines of credit available to expand. And so we came in, we structured a sale-leaseback for them. We were able to help them pull almost $1 million out of the real estate. We gave them some flexibility, right? We did not lock them into a 10-year lease. We kept the term a little bit shorter. Again, it was a win-win, right? I mean, if somebody gives you a check for $1 million, right, and all you got to do is stay in your building, it's kind of a no-brainer.
Exactly. I'm surprised. I think my assumption when we sat down was more of your focus being every day on trying to optimize the sale of that building. You're going well beyond that. This is much more of a consultant type relationship. You're inside of that business trying to figure out what makes the most sense, not only for them personally, but for the business as well. That's a lot more than I expected.
Yeah,
was it more than you expected when maybe you started?
Oh, for sure. Yeah. I had no idea that, for one, I would be sitting down with the people that I am, right? So, you go in and you have a conversation with the CEO or the president, the owner of the business, right? And it's a very candid conversation. It's okay. This is our financial situation. These are our options, right? And I tend to be one of those options. And with that, you want to understand, again, what their goals are, but what do they actually need? Does this guy need cash in 30 days or 60 days? Or is this something where he just likes the idea of having a chunk of money, right? He wants to go buy, a lake house, somewhere out west, but he doesn't actually need it, And exactly. I tell people all the time, listen, this isn't for you. For X, Y, and Z reasons, I would not recommend doing this. You're going to, put yourself in a tough spot at some point in the future. So, I mean, we really come in, we try to understand what's going on. We try to learn as much as we can about their business. And if it's, if this is the right solution for them, we'll help them get it done.
And these are fascinating people that you're sitting down with. Most of them have probably either built this business from scratch or they're probably carrying on a legacy of a business in their family. Is that pretty accurate that these folks are? I mean, that's
100%.
Crazy.
I mean, it's incredible, the ambition and the ability that we see. So when I go and I meet with a manufacturer, I mean, they have 30, 40, 50 employees. It's a great business. I don't know, they're doing 5 million, 10 million a year in revenue. That's amazing, right? They typically, they started in their garage, right? And they built this. Now they're occupying 50,000 square feet. And it's incredible to see those stories. And, to your point, when you're talking about a family business, often there's that transition from, one generation to the next generation. And last year we sat down with a group. There was about to be a transition. So we had a father and a son, great manufacturing business. The father had, built this company up for about 25 years. His son has been working there since he graduated college, right? So
Right.
his son was probably like late 20s. And he had gotten to a point where he was ready to take over. Okay. He worked on the floor. He worked in the office. He worked sales. He got a full global picture of the business. He's ready to take over. Well, just because he was ready to take over didn't mean that he was financially ready to take over, right?
Oh, sure.
And so we had a point that we sat down, and the father wanted to, I don't know for whatever reason, but he had this dream of buying a helicopter, right? And so he needed it was like a couple $1 million, right, to buy this helicopter, right? And the son was at a point where he had been working in the business, but not saving millions of dollars, right, to eventually buy his father out of the business. And dad was looking for a lump sum of money, and he wanted to go fly his helicopter. And so what they did is the father and son worked out a buyout agreement, okay? And so they sat down, here's the business. Let's put that in a silo right here. His son's going to pay, $50,000 down. He's then going to buy his dad out over the next 5 years, okay? It only gets dad $50,000. We got $1,950,000 to go on the helicopter. And so we came in and we said, all right, well, you have this chunk of real estate, okay? Son can't afford to buy it. You want the money out of it. We want to make sure that your son has a place to operate this business. The employees have a home, right? We don't want this business to leave, okay?
Yeah.
And so by structuring a sale-leaseback, we were able to get the $2 million out of the real estate.
Yep.
It ensures that the business continue to operate. We're going to limit the son's exposure for operating costs, right? So we're going to address any maintenance items in the lease. We're going to make sure that the buyer is aware of the condition of the property going into the deal. And at the end of the day, dad can buy his helicopter. So
Did he buy his helicopter?
I haven't seen any videos. He told me he was going to look at them, but I told him I wanted to ride.
Yeah, exactly.
Yeah, so we'll see. But as the story goes, we were able to get through in about 60 days, right? So he was able to let his son take over the business. We cashed him out of the real estate. He was able to live the life that he wanted or buy whatever he wanted, and it was a great story to tell.
You probably see, and this is going to be a good question, I think, for all of our listeners. You probably see a lot of transitions or attempted transitions. What goes well? Who does this well, and what are the points of failure when you see these transitions start to happen, particularly from generation 1 to 2 or 2 to 3?
Yeah.
What are some of those either stories or guidance you can give our listeners? Because I would imagine some are going through the same thought of doing that and may feel a little stuck. I don't think there's a guidebook for there's a guidebook for successful transitions, but I don't think it's well known. What have you seen? Who's done well? Who's struggled?
So what I see as the biggest hang up for a lot of family-owned businesses is the culture. Okay. And so you have dad mom that ran the business a certain way.
Yeah.
And then the next generation is taking over, and somebody that's our age going from somebody that's 50 and 60.
Yeah.
I mean, for one, there's technology, right? But two, there's different diversity and inclusion topics to talk about. I mean, there's a whole different world generationally speaking, and so you see this transition. What I think helps them bridge that gap or get through it is outlining roles and responsibilities. Okay. So here is the objective. This is what we're trying to achieve. And then 2, communication. Okay. So, I mean, if you can outline what it is you want to do, and then you can effectively communicate, how you're going to go about it, or how you're going to get from A to B. I think that's the best way to succeed with any type of transition.
Is there a background of that person or party who's taking over that business? Is there any connection between how they've spent their time previously? In the example you described, that person had spent a lot of time around the business. Is that the preferred background of that person? Or I guess I could make a case that going outside of the business would also allow you to gain the experience and insight necessary, instead of being in this silo that you've probably been in maybe your whole life,
Right.
as opposed to that business. Have you seen a differentiation of success based on the background experiences that person taking over, or is it really case by case?
I think it's case by case. Not that I, am a owner of a manufacturing business, but I see the benefit of having outside experience. And so I really appreciate, I think it's a great practice. If you do have a generation below you that's going to take over, send them to a couple of different companies, right?
Yeah.
So they need to go work for, somebody within this sector, somebody within this sector, get an idea of supply chain, right? Get an idea of the cultural practices at different companies, how to become most efficient, right? Like, what are other companies doing that may help you succeed? You can bring that back home. On the flip side, if you are going to take over a business, it helps to be, intimately familiar, right? Like, you've grown up in this business.
Yeah.
You've been here your entire career. You know everybody's, birthday, right? Like,
Yeah.
it's a family business down, to the smallest detail.
Yeah, I can make a case for either or both or all of the
Right.
above, right? I get disheartened when I look at the statistics that are very clear about wealth and wealth passing from generation 1 to 2 and 2 to 3.
Right.
It's gone,
Right.
in many cases. And so I think there's a lot to be learned from folks that are doing this successfully, and how to implement that in folks' family is a very difficult thing. Do you see a little bit of that from owners looking to pass that business where the kids or next generation is just not interested? And do you see that being tough for that business owner, or is that something that they maybe come to accept, and then selling to maybe a private equity just makes the most sense, and we'll try to maintain this wealth in a different way?
I can tell you I see it more often than I like.
Yeah.
It's crushing.
Wow.
Okay. So think about a small business owner, right? This is something where it's been not only their full-time job, but it's been nights and weekends. Okay. The kids grew up on the manufacturing floor, right? Family dinners are had in the office.
Yeah.
This business is as much of a family member, as somebody
Yeah.
living and breathing standing next to you. And so when you come to this point of transition and the next generation does not have a desire to take over the business,
Yeah.
it's just like a dagger, right,
Yeah.
for a lot of these business owners. And so they often then do, turn to some type of, strategic competitor, or, a private equity group, or like somebody that could potentially acquire the business. But what I typically see is they would like the family member to take over, and if they don't have interest in it, it's very hard on them.
I'm eyes wide open that I know my kids will not be doing what I'm doing right now. I
Sure.
can tell you that for sure, and I'm feeling okay with it. Talk about that business owner making that transition. So I see this all the time. We're mainly seeing landlords come to our desk, but we do have business owners as well. Talk about their mentality and making that transition, be it from the next generation or to private equity. How are they preparing themselves mentally for the state of this business that you just described as maybe a family member is in essence going away? What's that like mentally for some of these folks?
It's very tough. I often say that, I'm part real estate broker and part therapist, right? Like, we do a lot of listening, right? And a lot of,
Yes.
just trying to understand and I hear you statements.
Yep.
But again, this is something where it's been so intertwined and so woven into their day-to-day. It's a very hard transition. I'll tell you, what seems to be the most successful is the guys that quit cold turkey. Okay.
Oh, interesting.
So, oftentimes when the business is sold, they
Yeah.
want you to consult. They want you to stay on for
Yeah.
a year or 3 years. That works for some people. A lot of people, though, they want to pull the Band-Aid off, right?
Yeah.
They're going to come in on a Friday, they get their gold watch, and they're going to say goodbye to everybody. And then on Monday, they're, on a plane out to Montana, right?
Yeah,
They're
yeah.
going on a hunting trip, or they're going and doing something else to remove them totally from the business.
Yeah.
And it's, I think, a question, you need to look inside yourself, right? It's like,
Yeah.
look, do I want this to still be a big part of my life?
Yeah.
If so, I'll take my time moving, or is it best for me to just cut ties and, move on to the next chapter?
Is that confusing for staff and the employees of that business if the old owner is still there in sort of an earn-out consulting type scenario? Does that get confusing for them as well?
I can't say I have direct experience, being
Yeah.
a staffer or, being within that dynamic, but I would imagine it is, because I do deal with a lot of private equity companies where, they're coming in, they're bringing in a couple of key figures. Those guys are taking over or, they're going to start running the show. And all of the employees are still friendly, with the owner,
Yeah.
right? Or they still walk to the owner's office and they say, hey, I don't like how this is happening. Or we used to do it this way. Why are we doing it this way? And those are tough waters to navigate, right? Like, I guess I don't have a great answer, but I would have to imagine that it's something that's very tough to deal with.
Yeah, I don't think I want to navigate those, but I get the desire to maybe stay there. I want to add to some of your comments on what those owners, as they're making that transition out, need to think about. I love the idea of just ripping the Band-Aid off a little bit. What I'm looking for in some of those conversations is I need to hear something that you're passionate about. I have to hear that. When I don't hear that, I get kind of concerned about, I don't know if you really thought about all the aspects of not running your business, of not being a landlord anymore, what that means for you when you wake up on Monday.
Right.
And you normally do this, and now you're not going to. I'm not sure you really thought about that. So yeah, I'll play amateur therapist too.
Yeah.
But I'll encourage them to really think through that for a second before you run to sell and think that's what you want to do. What is that thing that you'd want to do that you're not doing now that you're really excited about? Do you hear that too from some of the business owners that are probably doing this a little bit better than others?
I can't tell you
out there.
how many consultants I've met that were business owners that retired for 3 months or 6 months or whatever it was, and they thought they were gonna be relieved and the stress was gonna be gone and they're gonna feel great, and want to hang out and go skiing all the time. And in reality, they need something to do. Right.
Yeah.
I mean, like you have to stay active in some capacity. You have to stay engaged, or else you're going to shrivel up, into you're going to fade away if you don't do something. So.
Yeah, and I see it all the time with it can be very detrimental to your health from a mental capacity perspective. Some level of purpose. What is your purpose?
Sure.
What gets you excited? Why do you want to get up in the morning?
Sure.
If you don't have that, that's a problem. That's a problem. So I want our listeners to be conscious of that and think about that.
Right.
Have that thing that you're really looking forward to. What didn't we cover? I feel like we covered a lot.
I
Do
think
we
we
miss any
covered a lot.
stories?
I
we
don't
had
think
your
so. I
stories.
mean, I think
Good
we
ones.
highlighted a lot of the clients that I typically deal with. At the end of the day, owning real estate is not passive, right? And I know we were talking about this before, and that is a spectrum. But for a lot of the people that we deal with, we can come in and we can help remove some of that burden. We can, give them an opportunity to take all of that money, invest it with somebody like yourself, or go out and do whatever they've, been dreaming to do or have wanted to do for a number of years. And so, that's one thing I talk about often is, look, it's great to invest in real estate, but you got to be ready for, some type of oversight.
I can make it passive. I can make it passive, buddy, all day long.
Super passive. Mailbox money, right?
Real mailbox money,
Yeah.
100%. We
That's
can
great.
get there. But you got to be ready for it.
Yep.
And so some are ready for it. Some didn't know they're ready for it, and man, did they get addicted to it really fast.
Yeah.
Like, oh, what else you got? Like, this is really interesting. This is really interesting. I like the checks rolling in. Well, this has been awesome, Nick. Thank you so much for joining us. Where can people find you, learn more about you?
So I appreciate you having me. I'm pretty active on LinkedIn, so anybody can find me there. Otherwise, give me a phone call. I'm southeastern Wisconsin. I'm on the road a lot, so I'd love to come out and sit down and chat.
That's awesome. Thank you again. Thank you, everyone, for listening. Until next time, we'll see you.
Thanks.
Did you get all that?